Welcome to the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield, and a market that had a lot of data dump on Wednesday, some things that continue to be talked about within this marketplace as the week went on, but no surprise, weather is still one of the top on the list. We'll talk weather, we'll talk the turnaround of this cattle market, the dollar, Fed comments. There's a lot to look at on this week's episode, so stick around.
Meet the champions of innovation in the heart of Nebraska. They're not just farmers, and they nurture more than just crops, pushing boundaries and turning challenges into opportunities. They trade knowledge and know-how, and their dedication doesn't end at harvest. It's in your every bite and every drive. The future of food, fuel, and fiber, and the future of Nebraska starts right here.
Well, welcome back once again. Joining us, of course, this week is going to be Darren Frye. He is with Water Street Solutions, and Shawn Hackett with Hackett Financial Advisors. And it's like I love to do every week, kind of get a single nugget from each one of you gentlemen and your biggest thing that you saw in the marketplace. So, Darren, we'll start out with you.
Well, I don't know if it was just this week or not, but, over the last few weeks and especially over the last few months, we've seen the corn side of the balance sheet tighten up quite a bit, as well as the wheat. I mean, if you look at Russia, you look at what's happening in Argentina, and even the fact that are we going to grow a 181 here or a little bit smaller crop yet to be determined. I think the fundamentals for corn are a lot more positive than they were just 4 months ago. And so that's been something that's evolved. But I think that's a bright spot here in our markets today.
All right, Shawn, what about you?
Well, I think there's a lot of bearishness that's built up here over the last few weeks on the strong dollar, the Fed's keeping interest rates up, kind of this risk-off trade that we've been seeing. And a lot of the marketing plans out there got accustomed to selling their cash in June on a June rally, which actually occurred in the spring. And so we're sort of off the normal cycle because of the way the weather's playing out this year. And so I think there's a pretty good opportunity here on the buy side, meaning if you're a cash buyer, physical buyer of corn feed, of bean meal, of wheat, and you need some, I think this risk off trade into the end of the month that we're seeing, I think is an opportunity to get something bought because we think some heat and some unfavorable weather is likely to be coming in July, and that should re-excite the market and provide a rally later on in the season than we're typically accustomed to.
Well, since we're talking weather, let's first talk weather here in the United States. And Shawn, I'll kind of start with you. Looking at the extreme variety that we've had, and I understand the Eastern Corn Belt's going to have some struggles coming up, but some decent harvest opportunities weather-wise for wheat and some heat units as well in the Western Corn Belt.
Very different start this year than we've been accustomed to. We've been accustomed to very dry springs, carrying into June, and then getting enough moisture and cool weather, and the crop's fine. This year, it's been very wet, more El Nino-like, more like 2011, more like 1983. We got off to a great start. Crops coming out. Yes, there's some problems with planting, but not too bad. But this is the year we think that the hot July, which we have not had since 2011 and 12, actually starts to deliver. We're going to see some of that, as you mentioned, in the Eastern Grain Belt. And that heat's going to provide warm night risks in the Eastern Grain Belt and your traditional hot daytime temperature droughts in the West. We think that combination is going to create the first adverse July in a very long time. And that, I think, can bring yields down considerably more than we've seen in recent years when it's been, the core grain belt's been having enough yields to overcome out west.
So, Darren, why has the markets not been talking a lot about Mexico and how extremely dry they have been as of late?
Well, I think there's a lot of reasons that we don't focus on certain aspects of the fundamental side when it comes to the bullish side. You got the funds really short. As Shawn said earlier, there's a lot of bearish sentiment out here, a lot of concerns over the economy, the dollar getting stronger here, at least now or into the end of the month. And so a lot of people are just like, oh, it doesn't matter if it's a little dry in Mexico and they're buying all our corn. That isn't enough to turn this market around. So I think we're going to need more. I think we're going to need a summer problem to threaten the U.S. crop here. And I do agree with Shawn. I think we're going to have a lot of heat in July. And, being from the agronomy side, you never have a big crop when you have high heat. You can have a big crop when you have dryness, as long as you have adequate moisture, subsoil moisture, and you have cooler weather, especially cooler weather at night. And so those are yield robbers when you have heat in the day and heat at night. And I think we're in for one of those this year. And one more thing I would say is we've kind of been conditioned, the last few years we've had drought in the West. We've pulled out some pretty good yields. And now people think there's nothing you can do to hurt this crop. I totally disagree with that. And I think this year might be the year that opens some people's eyes to that.
I think that just brings up the importance of why you should have a marketing plan in place for weather like this in July.
Well, and I think Shawn will attest to the fact that a lot of marketing plans, as we get this next rally, I think people will be too sold going into what could be a pretty detrimental period of time if we see heat actually damage this crop. And I would expect that. And then, of course, prices go up, then you're out of position, you've sold too much, and obviously bushels are going down on the farm. So I do think a marketing plan is going to be necessary this year.
Shawn, the Feds came out with their comments at 1:00 and had that news conference at 1:30. What was your takeaway and how that's going to affect we see these markets trade?
Well, my working theory is that the Federal Reserve, the chairman, is not really independent as everybody thinks they are. The chairman is there at the pleasure of the president of the United States. He knows he has to toe the line. I believe they want to keep inflation down at all costs going into the election. Everybody that's talking to the administration is saying this inflation is really bothering me. We're not happy with this. And I think the Federal Reserve has got the message. It's okay to keep rates higher into the election so long as stock market doesn't crash and the economy doesn't show that the dam is breaking. So far, neither one has happened yet. And that has brought in this stronger dollar, weaker, commodity prices, exactly what I think the administrative wants. And that just means on the margin, we need a bigger story than that in grains and other commodity markets to override that. And I agree with Darren, hot July temperatures into August are the key to that. And I think that will be eventually enough to override this macro factor that's negative for at least the commodity space.
So then, Darren, will this continue to see some stronger dollar being factored into this trade?
Well, I'm not really bullish the dollar longer term, but I do think the dollar can go higher here. And actually, if it does, it's negative to our commodities. If we'd see a break like we saw when the CPI came out, it only lasted a day or half a day. Obviously, commodities respond to that, and we need to get the dollar down, and I think eventually that'll happen.
All right. What about this cattle market, Darren? A statement was shared with me earlier this week. It said the cattle market is like a beach ball underwater. And I thought it's a perfect visual to how crazy this market has been.
Yeah, it really is. From a technical standpoint, we've been trading sideways since last September in a very large contracting triangle. And I do think that now we've had kind of a spark here of good cash news. I mean, yesterday afternoon, cash was up $6, $7, $8. And today we saw everything trade 96, 197 and the meat 310. And so you got a situation where they're looking for cattle. They're just not out there. And if we start breaking out to the upside, you can get a pretty good thrust out of a triangle. I thought it'd be later in summer, but this move looks to have some legs to it.
Well, Shawn, it sounds like the sales, not only at the sale barns, but the video sales of these cattle have been doing extremely well. And we've seen some bigger bids coming out of the country in the north.
Well, it seems to me every consumer that has decided they don't want to eat beef because it's too expensive for their budget has stopped eating it. And everybody that will still wants to eat it is eating it. And we still don't seem to have enough supply out there to satisfy those that still want to buy beef. And we still haven't really gotten anything going with retaining animals, the herd rebuilding cycle, which has historically been when you do make your final thrust to the upside. And absolutely agree with Darren, this contracting, what looks to me like a continuation pattern on the charts, looks really interesting. I agree. I thought it might happen later in the summer, but it might actually break out sooner. And if it does, this certainly measures a move that could be very sizable and obviously be a good opportunity for livestock, for cattle producers to lock some sales in when that rally looks like it's exhausted itself. So hard to not see positive things in the cattle market right now from what I'm seeing.
All right. Well, Shawn, since we're talking cattle, give us your takeaway on this dairy market right now.
Dairy market's been on fire. The HPA flu has impacted more animals than expected. The production hit has been greater than expected. The continued breeding of dairy cows to beef cows continues to limit any ability to grow the herd. And when we're looking out down the road, if we get higher prices that warrant profitability, I don't really see any way to get replacements back in anytime soon. And so we really have a situation in dairy that we've never really had before. It really is explosive. It's a situation that I think we could be looking at something very, very different. And I just don't see where there's any ability to bring production on. I almost feel like right now the dairy industry is like cattle, where normally we can turn dairy production on fairly quickly. I don't see that happening. It means we might need higher prices for longer to fix this problem. And remember, flu was here this year. It's likely to be back next winter. These flu epidemics don't go away. They keep coming back. And I think we're going to be dealing with this lower supply situation for quite some time. So I am very constructive, the dairy market, especially later in the year. I think those prices are where producers need to keep their topside open if they have any ability to do so.
And finally, Darren, as we wrap this up, what are you going to be watching Sunday night into the trade to next week's shortened trade with a holiday smashed in the middle?
I think the biggest thing we're focused on now, everybody, is just weather. You're not going to change a lot of the other things. Obviously, macro picture and weather, that's going to be the two most important things as we move into July, in my opinion.
All right, gentlemen, thank you so much for joining us this week, and happy Father's Day to you guys, and happy Father's Day to all our listeners and viewers. Just a quick reminder, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's this week's Nebraska Soybean Board Weekly Market Roundup.